Morning, friends. Morning, friends. So, guys, in last session, we have discussed about the NPA, right? That is when an account is considered as NPA. And if you recall, guys, we discussed about that 90 days criteria. Okay, about that 90 days criteria. Either it is bill purchase or it is bill discount, whatever. Even for term loan, even for CC account and overdraft account. And in CC and overdraft account, we learned that the account will be NPA, that 90 days criteria if it is out of order. And what is the meaning of out of order? We learned in our last session. So when account become NPA, that is discussed. Now, what is the classification of banks loan advances? There are basically two bifurcation. First is standard accounts and other is a NPA account. And in NPA, there are further classification: substandard, doubtful, and loss. So we are starting a session with classification of banks loan and advances into standard and NPA, further classification of NPA, and then NPA provision, and then question and answers regarding this. Okay, guys. So this is your module, guys, and very nicely explained. So performing asset and non-performing asset. It's a classification of bank advances. In non-performing assets, substandard assets, doubtful assets, and loss assets. This is the basic classification. Now, what is standard assets? So it is naturally, these are the assets which does not disclose any problem. It means these are the accounts which pays the dues on a regular basis. On a regular basis. They don't show any problem as far as recovery is concerned. So these are regular accounts, these are standard accounts. Now, what is substandard accounts? A substandard assets is one which has been classified as NPA for a period not exceeding 12 months. So we can say when the account become NPA for the first 12 months, it is known as substandard category. When account become NPA for the first 12 months, it is considered as substandard. Okay, what is doubtful? It's an X category. An asset would be classified and as doubtful if it has remained in a substandard category for at least 12 months. So when in a substandard category 12 months are over, then it's more difficult account to handle. I would say, first it was a bad account, now it becomes worse. So the second stage, if this account continues as a substandard assets, then after 12 months it is known as doubtful assets. So weakness are more and recovery may be future, it may less because the borrower is not responding, is not at all depositing the money. And last is a loss asset. And guys, when we will do the provision, this doubtful assets are further classified with doubtful 1, doubtful 2 and doubtful 3, depend on number of years since it becomes doubtful. And last is a loss asset. So by name itself you can understand, sir, it is an asset which is a loss asset. So it means either bank themselves identify this borrower as a loss, means we are not going to get anything, or we can say auditor or RBI inspector, anyone has classified this borrower as a loss, it means there is no hopes to get anything from this borrower. So in totality we can say that performing assets are those assets which do not show any problem as far as recovery is concerned. These are the regular accounts. NP accounts, the moment account is considered or recognized as NPA, there will be 3 further classification. For the first 12 months, it is understand or termed as a substandard. After substandard, still there is no recovery, then it is doubtful. In doubtful, there are 3 stages, doubtful 1, doubtful 2 and doubtful 3, on which basis we will make the provision. And last is a loss asset. It means nothing will be recovered at all. So guys, in our regular business, we are identifying our debtors as a doubtful debtors. It means this debtor in future may become bad debt. And why we are doing this exercise? Because sir, if today I think that that gentleman will not pay me the money, so according to my logic and according to my expectation, my estimate, that borrower may become bad debt in future. Then what we are doing as per the conservatism and prudence, sir, if there is a doubtful debt, we need to create the reserves and provision which is known as bad debt reserve or a provision for doubtful debt, depending on the uncertainty, 10%, 20, whatever. So in our business, guys, we decide how much percentage BDR should be created, how much percentage provision needs to be made. But in case of bank, naturally RBI decide that percentage. So what percentage of BDR or a provision should be created on such NP account is very much properly and crystal clear shown by the RBI. So as per today, the percentage are as follows. So guys, this is a provision. Rates of provision are here mentioned. The first is about the standard assets. Now friend, see the transparency, see the precaution. Basically guys, the standard asset doesn't show any uncertainty. These are the regular accounts. Standard means regular accounts. They don't show any problem. But still, as per the RBI norms, we have to create the provision for this standard assets also. For this standard asset also. Percentage are verified here, percentage are given here, and this percentage are naturally on loans and advances. We have to understand. Okay, the first one, if it is an advance to agriculture or SME, if asset is a standard and advance is given to agriculture and SME, then the rate is 0.25 percentage, not 25 percentage, not 1 percentage, it is 0.25 percentage, very less. Why? Because it is a standard assets, it is a standard accounts. Basically, it doesn't require any provision, but still a small percentage are mentioned. If it is a CRE, that is commercial real estate, then it is little bit risky, therefore 1 percentage. Okay, 1 percentage. If it is a CRE but residential, it's a real estate company, but it is not purely commercial, it's a housing sector, it is known as CREH, that is 0.75. Housing sector little bit less risky, so that is 0.75. So guys, after this 1, 2 and 3, directly switch over to the point number 6, all other is 0.40 percentage. All other is 0.40 percentage. So you can say, sir, if it is a standard assets, then please let me know whether it is the agriculture advance or it is SME advance. Whether this is agriculture or SME advance, if it is yes, then the percentage of provision is only 0.25 percentage. If it is CRE, real estate, then 1 percentage. But sir, if it is CRE but having a housing sector, CREH, then little bit less, 0.75 percentage. And if it is nothing specified in a question, simply say it is standard assets, no specification, then a standard rate, that is 0.40 percentage, should be considered. So 4 things are there. If it is agriculture and SME, it is 0.25 percentage, CRE 1 percentage, CRE housing 0.75 percentage, other 0.40 percentage. So standard asset story is done. Okay, now the table is here. If it's become NPA, then in NPA the first category is substandard. So if it is a substandard, then we need to verify whether the advance is secured or unsecured. Guys, generally the advance is always secured. But if it is specifically mentioned in the question, it is unsecured, then rates are differ. So if it is secured, it is 15 percentage. It is 15 percentage. If it is unsecured, then the percentage are more because it is unsecured, risk are more. So 25 percentage. But if it is unsecured in case of infrastructure accounts, but we have a escrow account. Escrow accounts, it means in a simple term, you can say it is one type of security available. It is one type of, small fixed deposit available, separate money is available. So account is unsecured, but we have some escrow amount. We have some securities, small securities there, not big, but small securities there. Then little bit less risky. Therefore 20 percentage. So guys, don't mug up this percentage. There is no sense of just mug up the percentage. Go by logic. Sir, if it is secured, it means we are secured. So less percentage, 15 percentage. If account is unsecured, means we don't have any security, then it is risky. Therefore 25 percentage. So it is unsecured, but we have an escrow account. So in escrow account, in a special account, in a separate account, as per the RBI norm, we have some money, not that much big, but some money. Okay, you have some money, then some risk is reduced. Therefore percentage are 20 compared to 25. So this is about substandard. Then doubtful. If it is unsecured, 100%, no chance. It is doubtful and we don't have any security, forget about, provide 100%. If it is secured, okay, we have some security, then I told you before 5-7 minutes, we have a separate category, D1, D2, D3, doubtful 1, doubtful 2, doubtful 3. If it is up to only 1 year, doubtful up to 1 year, then 25%. Doubtful 1 to 3 years, it is 40%. Doubtful more than 3 years, it is 100%, very less chance of recovery. And last is loss assets. The name itself says it's a loss completely. There is no point of second thought, and therefore it is 100%. So if accounts NPA, then we should consider whether it is a substandard, doubtful, or loss. If it is substandard, then it is secured or unsecured. If it is secured, then 15%. If it is unsecured, then 25%. If it is unsecured but we have escrow account available, some securities available, we are little bit safe, then instead of 25, go with 20. If it is doubtful, no security, unsecured, 100%. If it is doubtful but we have security, then period wise, for the first year, it is 25%. 1 to 3 year, it is 40%. If doubtful more than 3 year, then it is 100%. And in case of loss advances, it is also 100%. And guys, as per this percentage, we need to provide provision. We need to provide provision. And it's a simply note what I told you guys. Since no bank is likely to extend any loans or advances without adequate security. Naturally, guys, naturally, bank cannot give advance without security. Unsecured loans are not allowed, right? It is prudent to assume in the question that even in the case of standard or doubtful or loss, okay, substandard, doubtful, and loss, the same are secured unless the question specifically mention otherwise. So I told you earlier that if nothing specified, assume that it is a standard asset. It is a secured assets. And if it is secured asset, then you should provide as per the secured assets percentage. And if some specifically say that is unsecured, then we need to provide as per the unsecured percentage. So finally we can say, sir, if it is a standard assets, nutshell, we are revising for the last time, then we will start the question. If it is a standard assets, okay, fine, standard assets, then see whether it is a MS, it is a SME or agriculture. If it is agriculture and SME, then go with only 0.25%, only 0.25%. If it is a CRE, real estate, it is 1%. If it is a housing sector, then 0.75%. And all other are 0.40%. All other are 0.40%. Standard is over. Then go with substandard. Sir, if it is secured, means we have security, then 15%. Sir, if it is unsecured, then 25%. Unsecured, but we have some escrow, some deposits are available, some securities available, very little, then 20%. If it is doubtful, unsecured, 100%. If it is doubtful, secured, then D1, D2, D3. For the first year, it is 25%, 1 to 3 year, 40%, more than 3 year, 100%, and loss is always 100%. And if nothing specified, we need to assume that whether it is a substandard or a doubtful or a loss, if nothing specified, we should assume that it should be secured. It should be secured. It should be secured. So guys, this is on your page number 8.52 onwards. It is 8.52 onwards. Because on this note, we have to start question of how we should calculate the provision on standard as well as substandard assets. Okay, guys. So I hope you have opened the page. You are on the consent page, and we need to start the questions. We need to start the questions. Okay, fine. So guys, if possible, giving you 30 seconds, just revise it for once so that we can start the question. Just revise the percentage, guys. 8.52 onwards, because in question we have to directly write the percentage and we need to calculate the same. Your module 8.52 onwards. Okay, guys. So this is the question. Question number 9. From the following information, find out the amount of provision. Find out the amount of provision. So guys, you need to find out the amount of provision. And you are given different type of assets. You are given different type of assets. First, you are given standard assets. So 5,000 is standard assets. Then you are given substandard, standard, substandard, then doubtful. What is it? It is not covered by security. It means it is unsecured. Covered by security, it means it is secured. But here up to 1 year, 2 year, 3 year, 4 year, and last is a loss asset. Now guys, as far as substandard assets, nothing specified. Nothing specified. So what we understand, if nothing specified, then we should assume as a secured. Okay. So in case of substandard, nothing specified. So you can assume as secured, and percentage will be that way. In standard assets, also nothing specified. So we learned that. So in standard assets, we have to understand whether it is a agriculture, SME, CRE, CREH, or other. So guys, if nothing specified, then it should be assumed as other. No agriculture, no SME, no CRE, no CREH, it should be assumed as other, and percentage will be accordingly. So I hope guys you have taken the screenshot, and we need to prepare the table. So giving you 10-15 seconds take a screenshot so that we can start the answer. Okay, guys, I hope the screenshot has been taken, guys. So from this, how we should prepare the table? It should be like this, guys. So there will be 4 columns: particulars, amount, percentage of provision, and provision amount. So in first 2 columns, you need to write the amount outstanding. Then in third column, we will write the percentage. And last, we will write the amount multiply with percentage and then amount of provision and then total. This should be the table. So please prepare this first 2 columns and then we will write step by step the percentage. That's great. Student has started to answer. Very nice. So guys, first prepare the table and then we will start step by step how much percentage we should follow. Kya baat hai? Very nice. Some student has told the total even. Total of all. Great. So Harsh has done complete the question and he has told me the total of provision also. Double 2602850, you know, Pooja and Ria, you made some small mistake. Okay, that's why little bit wrong answer. Let's discuss the percentage now. Let's discuss the percentage. Okay, guys, let's start with the percentage because there may be some small issue regarding calculation part. Okay, we will write the percentage here. So guys, first of all, let me know, be fast. Let's start from here only, simple. Okay, standard assets. First is a 5,000 standard assets. So tell me guys, this is standard assets, we should assume as other. And guys, the other, if you recall, the provision is 0.40 percentage. It is not 40. It is 0.40%, right guys? Yes, it is 0.40, not 40. I think the answers which were a little bit incorrect, they have perhaps consider 40%, right? Yes, yes, Pooja, I understand, but your answer is little bit wrong. Okay, so that's why. Nitin, we will check the answer. Little bit wrong. Hina, we are checking. Vrinda, your answer is correct. Okay, so it is 0.40 percentage, right? 0.40 percentage. Okay. Next is a substandard, and as nothing specified, we assume that it is a secured portion. And if it is secured portion, you can see the table. It should be 15 percentage. Yes, it should be 15 percentage. Then Pooja, go with the question what I am telling you. It's a better that you should go with this question, not any other question, right? Yes. So substandard, assume secured, that is 15 percentage. That is 15 percentage. Perfect. Okay. Then doubtful. Doubtful, but it is unsecured. Unsecured. We understand if doubtful is unsecured, then it should be 100 percentage, guys. Then it should be 100 percentage. Simple. Yeah. Yes, Kushi is correct. Shivam is correct. Vandana is correct. Gautam, SLR and CRR we did in last session. It is over and out in last session. Okay. Fine. Now doubtful, which is secured. Now guys, please let me know what will be percentage on 50, 100, 200 and 150. Tell me. 50, how much? 100, how much? 200, how much? 150, how much? Tell me what percentage we will apply on 50, then on 100, then on 200, then on 150. Please be fast. Yes, guys, be fast. How much percentage on 50, 100, 200 and 150? Sir, it should be 25 percentage, 40 percentage, 40 percentage, 100 percentage. 25 percentage, 40 percentage, 40 percentage, 100 percentage. Yes. Yes, Survi, you are correct. Shivam is correct. Sandeep is correct. Ria is correct. Perfect. Like this, guys. 25, 40, 40 and 100. Yes. Perfect. Very nice. And loss assets, as we discussed, loss assets is always 100 percentage. And now guys, you can make a total and let me know what is the final answer. Yes guys, what is the final answer, friend? Perfect. No, Sajid, we discuss very categorically, nothing specified, then it is secured. No other thought. Yes, Pooja. You are right. Pooja, now you are right. Okay, guys, this is the final answer. Yes, perfect. 870.5. Perfect. Mahendra, it should be 870.5 here. How it is 1050.5? So check your answer with this. There may be some mistake. Okay, guys, I hope this is clear. Okay. Let's move to the next question. Okay, guys, 9 is over and out. So 11B is your homework, guys. A small question, very easy. 11B is your homework. You can take a screenshot. It's a very simple question, but take a screenshot. 11B. Same type of question. Same, almost. I think it is easier than what we did. Yes, guys, I hope you have taken the screenshot, guys. Can we go further? Then switch over to 21. Very nice question. Yes. Guys, 21, this bill is your homework. You can first of all, this last four amount is your homework, which we did in our second session, sorry. So this last four amount from which we need to prepare bill for collection assets and bill for collection liability. So this last four amount is your homework, but we are at present doing this A portion. This is B. So from here, it is your homework. So this is homework. And this is we have to do. So guys, you have a standard assets. So 7,000 is standard assets. But in this 7,000, security available is 6,000. Then you are given substandard, nothing specified. As you know, nothing specified, then what is to be done? then doubtful. And guys, doubtful, you have three things. Doubtful for less than 1 year. From this 1,500, from this 1,500 is secured more than 1 year. From this 500, 300 is secured, and for this 300, no security. It is unsecured. So doubtful less than 1 year, 1,000 is total, out of which 500 secured. So remaining 500 is unsecured. From this 500, 300 security available. So remaining is unsecured, and this 300 is completely unsecured. So guys, prepare a table what we did in last question and tell me your answer. It's a good question to do. I hope guys you take a screenshot and then we are going further. And guys, you need to prepare this type of table, 4 columns as we discuss. So guys, giving you 3 minutes. Okay, giving you 3 minutes. Prepare this table and tell me answer. The same 4 column as we did in last question. Ria, if you are asking, then how we can cross verify the answer? So you think on your own and then we will discuss and then you will freeze. Okay, answers are coming. One answer I got is 2173. So guys, your last 30 seconds. One answer I got is 2173. Yes, guys, be fast. Other answer I got 4495. Other answer I got 1723. Other answer I got once again 1723. Last 10 seconds, guys. Last 10 seconds, be fast. Okay, one more answer I got 1723. One more answer 1723. One more answer 1723. Okay, so now we cannot wait. Now we cannot wait. So, guys, this substandard we should assume as naturally secured. So, from the doubtful 1 year, 500 is secured and other 500 is unsecured. So from this 1000, 500 secured and 500 unsecured. From this 500, 200 is unsecured, 300 is secured. From this 500, 200 is unsecured, 300 is secured. And this is completely unsecured, 300 completely unsecured. This should be the bifurcation. Okay, guys, if you have done this, if you have done this in this way, then it will be like this. Right, guys? If this is has been done, then it should be like this. Simple. Unsecured doubtful always 100 percentage and secured as per the period 25, 40 and 100. I hope till that everybody should be clear, guys. Right? Now the problem is on this 7,000. Sir, how should we consider this 7,000? How should we consider on this 7,000, sir? Sir, on this 7,000, sir, 6,000 is secured and remaining 1,000 is unsecured. So, sir, how we should consider provision on this 7,000? If you recall, our standard percentage, then guys, in standard percentage, we don't consider how much secured and how much unsecured. We are just considering whether it is agriculture, SME, CRE, CREH, or other. And if nothing specified, it should be assumed as other, and it should be 0.40 percentage. Secured, unsecured is not considered as far as standard assets are there. Yes, guys. And therefore, many students are correct. I really appreciate. Superb. Okay. And this is the final answer. Yes, guys, this is the final answer. So Hina is correct, Harsh is correct, Sajid is correct, Khushi is correct, Pooja is correct, Vikas is correct, Surbi is correct. Yes, Pooja and Sandeep, yeah. So I hope जिनके आंसर्स थोड़े से गलत थे, थोड़ा सा इधर उधर हो गया, you know, वरना Sajid, I thought you then correctly given the answer. Sandeep. Okay. I hope now it is clear. Right, guys? I hope now it is clear. Clear, guys? Can we switch over to next question? Yes, Sandeep. Now it is correct. Fine. Vandana, I hope now you also got the answer properly. Okay, guys. Switch over to the next question. Next question is interesting once again. It is a small question, question number 10. Okay, so read the question, guys, and see what we are supposed to do. State how could you classify the loan as secured or unsecured. So we need to decide whether this loan is secured or it is unsecured. We need to understand whether it is secured or unsecured. So guys, please take a screenshot and read the question carefully, then we'll understand how it's to be done. Please guys, be fast. I hope guys you have read the question. You take a screenshot also. Okay, guys. So it is found that a bank loan of 12 lakh. So loan amount is 12 lakh was given on 30th September. Okay. 10 percentage is your per annum ROI. Interest is to be payable on half yearly basis. But the loan was outstanding as on 30th March 2012 without any payment either towards principal or interest. So we can say not, then it was 30 per share in January, but on 31st March balance sheet date, it is 82 per share. It is 82 per share. And naturally, we need to finalize the classification of balance sheet date, that is 31st March 22. That is 31st March 22. Right, guys? This is what the question speaks about. Okay. So what we are supposed to do, sir? We need to compare. This is what we are supposed to do. We have to compare outstanding balance with realizable value of security as on 31st March. So guys, you need to find out here. Okay, here in this, below this outstanding, you are supposed to find out what is the outstanding balance of this loan as on 31st March, and this should be compared with realized, otherwise unsecured. So guys, we need to do this, guys. So tell me how it should be done. And what is the outstanding of loan as on 31st March? What is the realizable value of security as on 31st March? And tell me whether security is more than balance or not. Giving you only 30 seconds now. Yes, guys. Only 30 seconds. Tell me. Yes, guys. Only 30 seconds now. Please be fast. Yes, guys. Okay, Harsh got the answer. Vrinda got the answer. Yes, guys. Remaining students, now last 10 seconds, guys. I can't give more than that. Last 10 seconds and tell me the answer, whether it is secured or unsecured. So we got the answer. Okay, guys. Now I can't give more time, guys. It is secured. Yes, it is secured. And the answer is 60,000, so 1260, but 82 per share, 16 entire loan is secured. Simple. Therefore, entire loan is absolutely secured. Then, guys, simple. I hope it is clear, guys. Okay. It is secured. How it is unsecured? Security is more than that. So it is secured, completely secured. Security is more than that. So it is secured. Right? So Pooja and Majid, I hope now it is clear. Okay. Okay, guys. Now switching over to new concept. Provisioning for advances when it is covered by ECGC or DICGC. So guys, this is an extra security given by government to the bank. So now bank is feeling more safe because they have not only their own security from borrower, but they are also the security from the ECGC and DICGC. So they have two securities now. So they said that in this case, provision is required is to be made only for the balance amount of advance in excess of the amount guaranteed by the corporation. So now, say for example, amount outstanding is 100. From this 100, 30 is bank owned security. So 70 is unsecured. From this 70, it is said that by this corporation, 50% we will secure. So 100 was outstanding, 30 rupees security is available. So 70, from this 70, 50% is given guarantee or secured by such corporation. So for bank, only 35 remaining is outstanding, which is unsecured, which is unsecured. So in the case bank also hold a security in respect of such advances, the realizable value of security should be deducted from the outstanding balance before ECGC or government set off. So in short, outstanding balance minus security available with the bank minus guarantee by such corporation, and remaining is unsecured, and accordingly we need to create the provision. It is on your page number 8.57, guys. 8.57. Okay, guys. And in such case, how we should calculate the provision? How we should calculate the provision? I am sharing it, guys. Very interesting. Just a moment. So this is the what I said you, right? And how it is calculated. So guys, this way it should be calculated. First, starting with outstanding balance less realizable value of security. So you got the unsecured portion. From this unsecured portion, we have to minus secured by above department, that is ECGC and DICGC. And last is net unsecured portion. Now guys, we learn in the provision point that if it is unsecured, take always 100%. And yes, guys. So please take a screenshot, guys, and then we'll start the questions. Ria, your question has the answer that our percentage are not 40% dear. It is 0.40, Ria, not 40%, 0.40. It is a standard asset. Got it? You took wrong percentage. Now I hope it is clear. It is not 40%, it is 0.40%, right? I hope now it is clear. Ria? Okay, guys. Can we start the question now, guys? let's start with the small question, very small question, 11A. 11A. B is homework, guys. Very small question. Please read the question and start it. Only 11A. So 60 is outstanding, friend. 60 is outstanding. Bank has security of 15 lakh rupees and 40% is secured by ECGC. And this account is a doubtful more than 3 years. This account is doubtful more than 3 years. So guys, first we need to find out outstanding balance minus realizable value of security equal to unsecured minus guaranteed by such department. You will get net unsecured. So A, B, C, D, E. What I told you in previous slide. A, B, C, D, E. First, guys, let me know what will be amount of A, B, C, D, E. Because once we get this A, B, C, D, E, then only we can find out the amount of provision. Yes, guys, be fast. Because Surbhi, that this department want to push up, want to encourage advances, want to encourage बैंक कि भैया आप लोन एडवांसेस दो तभी लोग बिजनेस करेंगे तभी इकोनॉमी घूमेगा. So just to rotate the economy in a perfect way. That's why they are giving such type of guarantees, right? Okay, Surbhi? Yes, guys. A, B, C, D. Tell me amount, guys. Please be fast. Okay, got the answers. 27, 27, 27, 27. Okay, remaining, guys, be fast. What will be amount of A, B, C, D, E? In this, guys, you need to write in this table outstanding less value of security, unsecured portion, amount secured by this department, and then net unsecured portion. In this, guys, A, B, C, D, E. Yes, guys. Now I can't give more time. Yes, exactly. Perfect. It is 27. Very nice. It is 27. Perfect. So now, guys, we need to find out amount of provision, and amount of provision will be on B separately, on E separately. So on this 15 separately, on this 27 separately. As I told you when we refer the calculation part. So guys, on this 27, separately and on this 15 separately. So tell me guys, how much amount of provision now, please? Kya baat, I got the answer fast. Very nice, very nice. Pooja, once check your answer, please. Harsh, your answer is correct. Khushi, answer is correct. Shivam, check the answer. Guys, refer this PPT, yaar. Please, yaar. Please refer this PPT. And then you to tell my answer. On E, it is like this. On B, as per this. You need to tell me answer on as per this, guys. We discuss on point number E, how much amount should be as a provision. On point number B, how much should be there. You should follow this here. Please don't waste it, guys. Fast, be fast. Ria, your answer is correct. Khushi, answer is correct. Yes, Surbi, answer is correct. Vrinda is correct. Sajid, check करो एक बार. Rafika is correct. Pooja is correct. So guys, if you see the question, guys, it is more than 3 years. It is more than 3 years. It's 100%. And on an unsecured, it is always 100%. So on 27, it is 100%. On 15 also, it is 100%. So it is 42, guys. Answer is 42. Yes. Like this. I hope now whosoever has small mistake now got the answer. On unsecured, that is 27, it is 100%. On 15, it is doubtful more than 3 years. So also 100%. So total 42, guys. I hope now it is clear. Yes, guys. Vikas, I hope it is clear. Rupesh, I hope it is clear. Okay, Pooja, I hope now it is clear. Clear, very nice. Okay, guys, now we can't wait, guys. Let's go to next question. 12. Please read the 12. Question number 12, guys. Please read it, guys. Very nice question is there. Okay, guys. So there are two types of loan. One is term loan. Second is a export credit. So they have not paid anything. They have not paid anything from 1st March 2009. And we have to decide on 31st March 14. We need to decide on 31st March 14. So first we need to decide A, B, C, D, E. So outstanding is 70 and 50. Department cover is 50%, 40%. Security is 30 and 25. And realizable security is 20 and 15. Remember guys, these both are differ. This both are differ. So guys, first we have to find out A, B, C, D, E. A, B, C, D, E. Okay. So guys, please, first of all, like previous question, A, B, C, D, E, and tell me what will be the final amount in E that is unsecured. That is unsecured. That is unsecured. Yes, Tajid, you are right. Yes, Pooja, you are right. Absolutely correct. And that's why I never show answer first. Okay. In my any session, anywhere, I am giving time. You trying to solve on your own. Then I am showing answer. Then you compare and then you understand where the mistake were. Okay. This is a perfect way, I think. Okay, got the answer 25, 27. 25, 27. 25, 27. Okay. Remaining students, be fast. What is in E? What is in E? A, B, C, D, E. Be fast, guys. Yes, Ria, we are checking. Don't worry. I got your answer. Okay, fine. 25, 27, 25, 27. Almost all are telling the same answer, guys. Perfect. Absolutely correct, guys. Very nice. It is like this. Perfect. 25, 27 is very nice. Perfect. Okay. After getting this 25, 27, guys, we need to find out the provision. Provision on E and provision on amount in B. So, guys, now tell me what will be the final answer? What will be the amount of provision? What will be the amount of provision? Total amount of provision, that is provision on amount in E and B. Be fast, guys. Now tell me amount of provision, guys. Okay, I got the answer. One answer I got is 42. One more answer 42. One more answer 42. One more answer 42. One more answer 42. Okay, fine. That's great. Be fast, guys. What will be amount of provision, guys? What will be the amount of provision? Yes, guys. Okay, Pooja, I got it. Don't worry. Yes, yes, Shivani, you can. Because there won't be any much differences. Okay, definitely you can. Rafika, how it is 55 42? Check your amount of E and amount of B. Dear, on E, there should be 100 percentage. And on B, as per the period, it should be 45. Okay, Rafika, I think you have typo mistake. Yeah, finally. Yes, 42. Okay, guys. So simple, very nice, perfect. I can see the answer correct. Very nice, guys. Very nice. Perfect. Good. Keep it up, guys. Yeah, I understand. There was a little bit typing mistake by two students. But now it is 45. Understand. Perfect, guys. Very nice. Okay, guys. And now the last question of this type, then break and then profit and loss. Okay. One small question of this point and then we will have a break. So now 27. Just a moment, guys. Okay, guys. I think now it is more legible because one or two student told कि सर थोड़ा सा अगर zoom हो सके तो मैंने हो सके उतना zoom किया है friend. I hope now it is more legible. Yes, guys. I think it is more legible, right? And question I upload on the app. Don't worry. Yes, guys. So 50 lakh is outstanding. ECC cover 40%. Security held 10 lakh. And realizable value is 12 lakh. It is more than 3 years. Term loan 75 lakh. DICC cover 50%. But maximum limit is 20. Maximum limit is 20. So guys, it means when you apply the 50 percentage, then 50 percentage after applying 50 percentage, that amount cannot exceed 20. If it is exceed 20, then we need to take 20 only. So when you find out regarding term loan A, B, C, D, E, then DICGC cover will be 50 percentage of outstanding amount, but that 50 percentage cannot exceed 20. So maximum it is 20. You can't write more than 20. It is that meaning. And 20 security, rather is 18 and it is also more than 3 years. So guys, let me know point number A, B, C, D, E. Point number A, B, C, D, E. Yes, guys. Point number A, B, C, D, E. Oh, wow. Students are very fast. They find out ABCD and they also find out the provision. Perfect. Very nice. So I need amount of E. Amount of E. Yes, guys, I need amount of E, unsecured portion. Surbi is correct. Vrinda is correct. Mahendra is correct. शिवम आपको पॉइंट वाला लिखना है. ओके, पॉइंट में आएगा तो भी आपको लिखना है. थोड़ा सा एक बार चेक करो. So first is outstanding balance, guys. Outstanding is 50 and 75. Out of 50 and 75, you have to minus realizable value of security, not security. Realizable value of security, that is 12 and 18. That is 12 and 18. Then you will get unsecured portion. On unsecured portion, apply the percentage. But in case of term loan, after applying percentage of 50, you should not go beyond 20. It should be 20 only. So outstanding balance less realizable value of security. You should minus realizable value of security. Then you will get unsecured portion. Then apply the percentage. And in case of term loan, the percentage application amount should not be more than 20. If it is more than 20, stick to 20 only. And then you will get unsecured portion. Surbi is correct. Vrinda is correct. Sajid is correct. Rupesh is correct. सत्यप्रता आप थोड़ा एक बार चेक करो. सत्यप्रता थोड़ा सा स्मॉल मे बी करेक्शन. ओके, फाइन गाइस, लेट मी फ्रीज दिस जस्ट अ मोमेंट. See guys, this is simple. I hope in this nobody has any issue. Right guys? In this nobody has any issue. Very simple. 50 minus 12, 38, 38, 40 percentage, no problem. So 22.8, very simple. But here in term loan, when you will apply percentage on this 57, then you should not go beyond 20. So in this 57, when you apply percentage, you cannot go beyond 20. You cannot go beyond 20. Yes, guys. So it will be like this. Okay. I hope now it is clear. So net unsecured is 37 and 22, guys. Net unsecured is 37 and 22.8. Many students got it absolutely correct. Many students got it absolutely correct. And now provision, guys. Please let me know provision, guys. Be fast. Please let me know provision now. On B, how much? On E, how much? Yes, guys. On B, how much? On E, how much? Yes, Sandeep, you are correct. Yes, Pooja, you are correct. Satyapadap, it should be now it is correct. Your typo mistake is there. Now you are correct. Perfect. No, dear, it should be 34.8. Still, you are telling the same thing. It should be 34.8. Clear. Recheck once again. It should be 34.8. Khushi, we have to find out provision on B as well as on E. Okay. On B as well as on E. I need total provision. I need total provision. Hina, once again check it. 55 is correct, but 60.8 is wrong. Check once again. Check once again, dear. On E, it will be 100 percentage, and on B, it will be as per the period. On E, it will be 100%. On B, as per the period. Check it once again, guys. On B, on E. Okay, on E 100%. On B, matlab 18 and 12. Now correct. 34.8. Perfect. Perfect. Yes, yes. Now you got the answer. No, no, Sonu. Here it is said that you read the question here. If you read the question, Sonu, it is said that it is see the question. It is more than 3 years doubtful. More than 3 years doubtful. See, right? It is D3, and that's why 100 percentage. In point number B, we have to go with this sentence. That's why it is 100%. Okay. On E, always 100 percentage, but on B, it is doubtful more than 3 years. Therefore, 100%. Okay. And this is the final answer. Almost all are correct, guys. Almost all are correct. Yes, guys, 55 and 34.8. Sonu, I think now you got the reasons behind this. Yes, 55 and 34.8, guys. Perfect. Okay, guys, so we are taking 5 minutes break and then we'll start format of profit and loss account, Form B. After 5 minutes break, we'll start format of profit and loss account, that is Form B. Yes, guys. See you after 5 minutes. We'll start Form B, profit and loss account. Yes, guys, welcome back. Okay, so now we are starting one of the very important concept, that is how bank prepare their own profit and loss account. Now, guys, RBI has given the formats, RBI has given the schedule, and we need to go accordingly. So, first we are learning the schedules, formats, and then we will start the question. Now, guys, this is your form B, which is mentioned as per the RBI formats. So, guys, form B is a PL account format. Now, see the schedule number. Okay, in income, there are only two schedules, that is 13 and 14. 13 and 14. 13 is interest income, which is a most routine income of any bank, and 14 is the other income. So whatever income other than interest, it is part of 14. So 13 is interest income and 14 is all other income. Now expense. Like interest income, there is an interest expense. So 15 is interest expense and 16 all other expense. 16 is all other expense. And here separately we should write provision and contingencies. So whatever provision, see NPA provision, what we calculate, it's a provision and contingency part. So whatever provisions we are writing, we have to write in this after schedule number 16. So we can say, so there are two schedules for income, 30 is interest, 14 is other, two schedule for expenses, 15 is interest and 16 is other, and all the provisions should be shown below schedule number 16 under the heading of provisions and contingencies. Okay, so now after this total of income minus total of expense, you will get net profit of the current year. From this net profit of current year, you will add profit of any from brought forward from the previous year. So you will get total profit available for appropriation. Total profit available for appropriation. And now, guys, these are the various appropriation which is part of any banking. So transfer to statutory reserves, transfer to other reserves, any dividend is there, and balance is transferred to balance sheet. So you can say there are four parts. First part is income. It is schedule number 13 and 14. Other part is expenses. It is 15 and 16. Then profit and loss of previous year plus current year, and then provisions. This four part is there. And it is on our page number 8.20, guys. 8.20. So it is Form B, profit and loss account. 13-14 are income schedule, 15-16 are expense schedule, provisions is after 16, then profit and loss, and then appropriation. It is profit and loss. Now guys, we need to understand what is to be mentioned in 13, 14, 15, 16. What needs to be mentioned in 13, 14, 15, 16. Okay. So here it is on page number 8.123 onwards. Okay. 8.123 onwards. So first there are all balance sheet schedules and then there will be profit and loss schedule. So we will start with schedule 13. Now guys, we reach to schedule 13. Now what is the name? Name is interest earned. Okay, what is part of this? Naturally, guys, write very categorically wherever you want to write. Okay, the name of schedule is interest income. So naturally, all type of interest income is part of 13. All type of interest. See here, interest on advance and bills, it is part of 13. Interest on balance with RBI, it is also part of 13. Interest from other bank, it is also part of 13 because the name is interest earned. But apart from this, remember very carefully, discount is also part of schedule 13. Income from investment is also part of 13. So guys, you can say, you can write over here in 13, all type of interest income, whether it is on advance or on bills or from RBI or from any other bank, all type of interest income is part of 13. Discount is part of 13, and income from investment is also part of 13. Please write, guys. Please write. Don't only refer the module and say, okay, fine, sir, we got it. Write wherever you want to write, guys, please. In schedule 13, there will be 4 items. First, interest on advance and bills. Second, interest on RBI, interest from RBI or from other bank. Third is discount. And 4 is income from investment. Please write it, guys. Interest on advance and bills first. Interest from RBI and other bank is second. Discount received is third. And income from investment is 4. Done, guys? So 4 amount are in 13. Now, if you see the format here, 13 is interest income, what we understood. Okay. 14 is other income. So all other income is part of 14. So 14 you can say, see, all other income. Commission, exchange, brokerage, profit and sale of investment, profit on revaluation of investment, profit on sale of asset, exchange transaction, dividend income, all is there. Which income? Dividend income from subsidiaries and JV. Okay, that dividend is part of here. Other dividend is part of 13. So you can say All other income, commission, exchange, brokerage, profit and sale of investment, profit on sale of assets, dividend from subsidiaries, all other part of 14. So 13, there is only four amount, only four amount, only four amount, 13 only four amount, and 14 everything else. 14 is everything else. And see the guys, loss is deducted and profit is added. Very simple. In 14, loss is in minus, profit in plus. So 13, 14 are gone. Now 15. See here, 15. 15 is interest expense. Bank has to pay interest on saving deposit, fixed deposit, term deposit, right? Or if bank is taken borrowing from RBI, then also bank has to pay interest. Okay. So 15, interest on deposits, interest on RBI or interbank borrowing. So it's an interest expense, interest on fixed deposit, current deposit, term deposits, whatever. Interest to RBI in other bank from whom borrowing has been taken. So 50 is interest expense and 60 is all other expense. Okay, you can remember simple. All interest expenses are 15 and all other expenses are 16. All other expenses are 16. So it's a salary, rent, printing, ad, depre, salary, director fees, auditor fees, postage, telegram, all, everything over here. Everything simple. So you can refer schedule, guys. Interest expense is 15 and other all expense are 16. Simple. So these are all other expense other than interest. Other than interest. Okay. And now important, what you will show in provision and contingency. What you will show in a provision and contingency. Okay. So here in module, they have showed it very properly, guys. So all these are balance sheet schedules. We will do it afterwards. Okay. So 13, what we did, interest earned, it is over. 14, other income is over. 15, interest expenses over. 16, other expense are also over. And now important is, yes, on page number 8.150, 8.150, provision and contingency, what we have to write in, okay, includes all provision made for bets and doubtful debts, that is NPA, taxation provision, and diminution in the value of investments and contingency. So basically there will be three provision, guys. Remember, there will be three provision. Provision for NPA, provision for taxation, and provision for investments. These three provisions are to be written in the heading called provision and contingency. Provision and contingency. Okay, so after this 13, 14, 15, 16, you will get the profit of current year. You will add profit of previous year and then appropriation. Now, what is the transfer to statutory reserves? What is the transfer to statutory reserves? It is, the word is statutory. It means it is compulsory. You have to transfer some percentage to reserve fund every year, compulsory. Every year, compulsory. And this is and this is at least 25% as per RBI notification. So guys, sharing the module page, it is 8.6, page number 8.6 on module. The name is Reserve Fund. As per RBI, it is minimum 25%. Minimum 25%. And guys, one more extremely important point. Write it wherever you want to write. Write it wherever you want to write. Okay. This percentage is only of the current year profit. Please write very carefully. This percentage should be applied only on current year profit. See the format, guys. Once again, see the format, guys. Here, you will find out the current year profit and you will add the last year profit. Then this debt reserve only should be considered on net profit of the current year, guys. This reserve, this debt reserve only on the profit of the current year, not total profit. Okay, not total profit. And guys, this is compulsory. This is compulsory. So before declaration of dividend, this needs to be done. Then only remaining profit you can declare dividend. So if you see the format, guys, first of all, this reserve, state reserve, then other reserve, then dividend, and then remaining profit transfer to balance sheet. And guys, this is a compulsory. This is compulsory. And therefore, this to be done even if the question is silent. This needs to be done even if the question is silent. So this reserve fund transfer is compulsory even if the question is silent. So guys, on page number 8.20, there is a form B 13, 14, 15, 16. In annexure part, provision and contingency are on page number 8.50. And remaining all in detail are from page number 8.130. 8.130. So once again, guys, in 13, please write, guys. If you don't write, if you have not written, please write it, guys. Please write once again. Last time I'm repeating. In 13, there are 4 items. In 13, there are 4 items. Interest on advances and bills. First, interest from RBI and other banks. Second, discount. Third, and income from investment is 4. Please write, guys. 4 amount is there in 13. And apart from this 4, all other income are part of 14, guys. Apart from this 4, all other income are part of 14. That is commission, exchange, brokerage, profit and loss on sale of investment, assets, everything. All are part of 14. 15, it's an interest expense. Only 2. Interest on deposits and interest on borrowings. Only 2. Interest on deposits, interest on borrowing, and all other expense other than interest. All expense other than interest are part of 16. All expense. And below the 16, we need to write provision contingency. There are 3 provisions which are part of this provision of NPA, provision of taxation, and provision on investments. And after this, we will find out profit of current year, On profit of current year, we will provide state reserves, and whatever total profit we have, we will do the appropriation if any, including dividends, and then remaining profit is transferred to balance sheet. Remaining profit is transferred to balance sheet. So guys, this is the format of profit and loss. And guys, now we can start the question of profit and loss, but we need to start with a small questions first and then big question. So first guys, this is question number 16. This is question number 16. Yes, guys. So from the following information, calculate the interest earned and interest expenses as per schedule. What is part of 13, guys? So you need to write which is part of 13 and which is part of 15. Which is part of 13 and which is part of 15. And then there are small two adjustment also. One about NPA and second about rebate. We'll do it afterwards. But first of all, guys, we need to understand out of this 10 amount or 12 amount, which is our 13 number schedule, which is our 15 number schedule. I hope 13 is interest income. And I told you there are 4 amounts are there in 13. Interest on advance and bills, interest off balance with RBI and other banks, discount, and income from investment. These 4 are part of 13. 15 is very simple. All interest expenses, interest on deposits, and interest on borrowing. Okay, guys. So we are starting. Be fast and you need to tell me which is 13 and which is 15. Start with interest on term loan. So if it is bank's income, interest income, then 13. If it is bank expenses, interest expense, then it is 15. So guys, let me know. First is interest on term loan. It is 13 or 15, guys. Interest on term loan. Interest on term loan. Yes, guys. It is 13. It is 13. Interest on fixed deposits. Interest on fixed deposits. Yes, guys. Interest on fixed deposits. Our expense 15. Interest on saving bank deposits. Interest on saving bank deposits. Interest on saving bank deposits. Sir, all deposits are our expenses. So it is 15. It is 15. Interest on CC. Guys, CC means overdraft. CC and overdraft are more or less same. So interest on CC, that is one type of advance given by bank. Interest on CC, 13 or 15 guys. Interest on CC, 13 on 15. Interest on CC. So naturally it is one type of advances given by bank. It is 13. Interest on borrowing. Yes guys, interest on borrowing. Interest on borrowing. Borrow means bank has borrow something. So it is one type of liability of bank and bank has to pay the interest. So interest on borrowing is 15. Interest on overdraft. Yes guys. Interest on overdraft. Interest on overdraft. Yes guys. Interest on overdraft. It is income. It is income. And therefore, $13. And therefore, 13. Okay, guys. Now this side. Okay. First is discount. Yes, guys. Discount. 13 or 15. Discount. Discount. 13 or 15, guys. Discount. Sir, interest discount is part of 13. It is bank income. It is 13. Next is interest dividend on investment. It is income from investment. It is income from investment. Income from investment. If nothing specified, whether dividend is from which company, subsidiary, joint venture, nothing specifies, guys. Therefore, it is naturally 13. Okay. It is 13. Income from investment, nothing specified. It is 13. Then interest accrued on investment. Guys, this is outstanding. So it will be only in balance sheet. It is outstanding. So it will be only in balance sheet. It is not in adjustment. It is in trial balance. Okay. So this interest will be only in balance sheet because it is in trial balance. Adjustments are below this. Interest on balance with RBI. Yes, guys, balance with RBI. Interest on balance with RBI. Yes, guys. Interest on balance with RBI. What is to be done? Interest on balance with RBI. Interest on balance with RBI. This interest, tell me guys, see one more thing. Interest on money at call, it means interest on balance with other bank. So interest on money at call means interest on balance with other bank. Okay. So guys, this both have same meaning. Interest on balance with RBI means it is interest on balance with RBI, and interest on balance with other bank. Both have same meaning. Logically. One interest on balance with RBI, second interest on balance with other bank. So tell me guys, whether this both interest 150, this both interest we will receive or pay. First let me know. This both interest will be received by bank or they will pay. Whether it is income or expense. Yes guys, last two is our income or expense. Sir, naturally it is interest on balance with RBI, interest on balance with other bank. It is our income. It is our income. And if it is our income, guys, then yes, you are correct, guys. It should be 13. This both should be 13. This both should be 13. So guys, schedule number is over and out. Okay. And now the adjustment. See the adjustment. Interest on NPA. Interest on NPA is as follows. This is earned and this is received. This is earned and this is received. So this is accrue and this is received. So guys, first is term loan 1540. See 1540. Okay. So total interest on term loan is 1540. So out of this, this is interest earned on NPA and this is actually received. This is actually received. So guys, can you tell me this 1540 now will change. So interest on term loan will not be 1540 in schedule 13. It will change because on NPA 750 should be received, but we received only 250. 750 should be received, but we received only 250, guys. So tell me, what is the final correct interest should be taken in profit and loss account? We learn income recognition in P&L and we understood that on standard accounts it should be on accrue basis, but on NPA it should be on receipt basis. So guys, please let me know what is final interest income of term loan to be considered after this adjustment in PL account, guys. Please let me know, guys. We should receive 750, but we received only 250, guys. What amount will be considered finally? Yes, guys. Term loan. From the 750, we received only 250. So 1540 is total. From this 750 should be received, but we received only 250. So what is the final amount? Yes, Ria is correct. Hina is correct. What is total NPA? What is total term loan interest will be considered? Khushi, I don't need only NPA. I need total interest. 1540 is PA plus NPA. 1540 is PA plus NPA. And but in NPA, 750 should be received, but only received 250. So now what is total interest to be considered? Ria is correct, Hina is correct. 1540 is total interest, PA plus NPA. But sir, PA is okay. But in NPA, 750 should be received, but we received only 250. So guys, 750 should be minus and 250 should be add. And the answer is yes, guys, you are correct. Sir, 750 is minus, 250 is plus. 750 is minus, 250 is plus, and correct amount therefore should be 1040. 1040. Harsh is correct, Sandeep is correct, Vikas is correct. And same will be logic in CC and OD, guys. Same logic will be in CC and OD. So 1400 and 400. Same logic. So it will be 1400 and 400. Done, guys. CC and OD. 1820 and 750. Yes, guys, like this. And the last small adjustment, rebate on bill discount is 50. Rebate on bill discount is 50. So guys, our discount income is 150. Our discount income is 150. So tell me guys, in this 150, this 50 should be minus or plus? So this 50 should be minus or plus, guys. Tell me, from this 150, this 50 should be minus or plus, guys. It's a rebate on bill discount. So what should I do, guys? This 50 should be minus or plus? Be fast, guys. Tell me. This 50 should be minus or plus? Yes, guys. Sir, it is a closing rebate, naturally. It's a closing rebate. And therefore, sir, it should be minus. And final discount should be considered 100. Final discount should be considered as 100. All are correct. Very nice. Inderpal, Rupesh, Riya, Vikas, Vrinda, Sandeep, all are correct. Absolutely fine. Perfect, dear. Perfect. It should be minus, guys. And now, guys, the sum is very simple. So we have written the schedules. You can refer once again. We have written all the schedules. Okay. We did the adjustment also. Okay, guys. So just I am sharing the answer because we have to prepare only 13 and 15. Not entire question, not pure P&L. Okay, so you have to just write correct schedule in correct number, nothing else. I hope you have taken a screenshot if it is required. And guys, this is the final answer. This is 13. Yes, guys, this is 13 with all adjustments. Total will be 3390. Total will be 3390. First amount is 100. First amount is 100. Okay. And this all we understood. How 10540, how 1400, how 400. And first amount is 100 rebate. So total is 3930. Please take a screenshot, guys. It's a final answer of schedule 13. Of schedule 13. Then, guys, and this is only 3 amount in 15. Only 3 amount in 15. 2720, guys. 2720. And this is once again 13. First amount is 100. Yes, guys. We will start big question of profit and loss. Okay, till that, guys, goodbye. Have a nice time. Do study well and keep smiling and speed smiling. So we will meet, I think, on the Wednesday. Yes, guys. We will meet on Wednesday, same time, and we'll start the big question of profit and loss. Yes, in there it will be on liability side. When we will learn balance sheet, we will learn this. Don't worry. Surbi, because it is given in adjustment, right? Because it is given in adjustment, that's why it is closing rebate. Okay. Vrinda, if it is loss, how can you transfer the reserve? It is percentage on profit. Okay, so it is as per the percentage on profit. If it is loss, no need to transfer. Don't worry. Okay, guys, once again, thank you very much. Goodbye. Have a nice time. See you on Wednesday. We will complete big equation of profit and loss. And I think on Wednesday, we will conclude the chapter also. Okay. So once again, have a nice time. Have a nice time, guys. Goodbye. And if it is any query, you can mail me on my name, my email ID, all small letter camihirpujara@gmail.com. camihirpujara@gmail.com. All small letter. My name camihirpujara@gmail.com. See you guys on Wednesday. Have a nice time. Puja, it is borrowing. If you borrow from someone, you need to pay interest. Okay, if you borrow from me 1 lakh rupees, then you will pay interest to me. So interest on borrowing is always expense. Okay. Yes, Rupesh, I will do that. Don't worry. It is borrowing is expense. It is part of 15. Pooja, it is part of 15, not 13. Okay. Interest on borrowing is part of 15 and interest on balance with RBI is 13. Clear? Okay, dear. Goodbye, fine. Goodbye.